Welcome to Markets Plus, where leading experts from across BMO discuss factors shaping the markets, economy, industry sectors, and much more. Visit bmocm.com/Markets Plus for more episodes.
Hi, I'm Warren Estey, Head of Investment Banking at BMO Capital Markets, and this is our Markets Plus podcast. Today, we're diving into the world of AI, and I'm excited to have Kristin Milchanowski, our Chief AI and Data Officer at BMO Financial Group, join us. Kristin is spearheading innovation in AI, analytics, robotics, and governance to propel BMO's digital-first future. Kristin brings over 20 years of experience as a global AI executive, having transformed financial institutions with cutting-edge technologies and data. Her impressive resume includes roles such as Global Innovation Partner at EY, Chief Data Scientist at Morgan Stanley, and Head of Compliance Tech and Model Management at JP Morgan. Kristin, welcome to the podcast.
Thank you, Warren. I'm super excited to be here.
All right, let's jump right into it. So my first question, at kind of a macro CEO board level, can a Fortune 500 CEO remain relevant without being AI native?
Well, Warren, definitely not for long. But being AI native doesn't mean coding the algorithms. What it means is thinking in systems where intelligence is embedded by design. So today's most competitive leaders are not asking if AI applies. They're asking where it breaks the business model and where can it unlock profit pools and where to double down. So an AI native CEOs, the way they integrate AI is going to be in capital allocation, workforce planning, product roadmaps, and risk frameworks. And they're thinking in terms of intelligence layers. It's about seeing the business through an AI lens where data becomes leverage, agents become coworkers, and decisions become orchestrated. So I think CEOs who fail to lead this transformation will end up following it. And that's not leadership at all, right? So the market's watching and the shareholders reward the execution. And I really do see that an AI native CEO is not just adapting to the future, they are reshaping it right here, right now.
So let's stay at the CEO and board level. If you consider AI's potential impact, should boards support an AI strategy with capital discipline or give it creative freedom? And should we be funding it with the same urgency as a strategic acquisition?
Boards really should be demanding both and enforcing that tension between them. So AI has to be treated as a strategic growth lever and not as an experimental playground. So that capital discipline, that rigor that comes, automatically for us, Warren, as a financial institution, but that the capital discipline, it really ensures your focus, that ROI rigor, the enterprise grade governance. But yet, without the creative freedom, organizations are going to default to incrementalism and miss these disruptive opportunities. So I really want to see boards asking for both of those things. The best AI strategies are going to treat discipline and creativity as dual engines.
So let's just stay now at the financial institution level. And I am really interested in your views on some of the most material ways AI will impact financial institutions in general.
So AI is already rewriting the banking playbook. The most material impacts that are emerging are really across 4 domains, Warren. We're seeing it across risk, revenue, resilience, and relationships. So in the risk area, AI is allowing for near real-time fraud detection, that's dynamic credit decisioning, which is increasingly important in this market, as you know. And we're also seeing adaptive surveillance, being able to proactively rather than reactively risk manage. So in that second area of a pillar around where it's rewriting things is revenue. And banks are using AI agents to hyper-personalize offers, cross-sell with more precision. And then the really fascinating area is this dynamic pricing where we're able to unlock new margin potential. So that third area, Warren, is resilience. And that's where we're seeing AI enhancing operational continuity by automating a lot of these complex back office workflows. That's where the magic of tech ops is happening to keep our institutions up and running every day. And it's incredible that through intelligent agents, we are able to do things from compliance reporting to reconciliation, reducing costs and error. And that fourth bucket where AI is really changing this landscape is around relationships. And so AI is enabling banking to serve our clients as a segment of one now instead of in silos. So you have a more natural, seamless experience. And we're able to deliver contextual insights now through these advanced intelligent agents. And so it's not just the relationship manager that can do it. Now our agents can do it too.
That's, really fascinating. So can you give me some examples of those contextual examples? Because I think that's probably hyper interesting, right? And, maybe quasi scary, but at least hyper interesting. So I'd love to hear any examples you got around that.
Absolutely. So at BMO, one of the products that we have created, which is gathering a lot of support and attention and awards, is in our PMBB sector. And that is with this thing called Lumi. And it's right now being used every day by our bankers who are servicing our clients. And it's an agent that is able to look through our policies and our procedures. And instead of having to go spend 3 hours and hunt for all of that information when we're live working with a client that's sitting right across from us, that banker is now able to ask the question of Lumi, and it illuminates the answer for our bankers. So the client is getting that real-time feedback and experience in a condensed fashion. And that's something that it's really fun to see the passion around our bankers in this AI space.
I love to hear examples like that. Okay, so let's stay at the macro, but kind of switch gears a little bit from a regulatory perspective. Are global regulatory frameworks prepared for scaled AI? Will we see divergence globally? And ultimately, can regulators keep up with the pace of AI development?
Not yet, and that's both a challenge and an opportunity. Most global regulatory frameworks were built for static models and linear risk relationships, and AI is introducing a level of nonlinearity and opacity and adaptiveness. And so it breaks this traditional oversight mechanism. So, for example, explainability in deep learning is still an evolving field, yet regulators are demanding transparency. So we see how the AI is iterative, and its iterative learning clashes with this rules-based audit trail that the regulatory framework has been traditionally designed. And so across jurisdictions, we're also seeing some fragmentation. The EU's AI Act emphasizes risk-based classification. The US is leaning towards sector-specific guidelines, and APAC markets vary widely in enforcement maturity. So what's missing is a harmonized baseline for enterprise-grade AI governance. We really need it to cover data integrity, model risk management, accountability, and human oversight. And we think that the financial sector needs more than just guidance, it needs infrastructure. So our institution and some of the other forward-looking institutions are building AI risk frameworks that anticipate this regulatory evolution rather than wait for it.
So now maybe move to closer to the client experience. You've just described a consumer client experience. But as we think about serving maybe institutional clients from a wide variety of ways, how can AI aid in predicting market trends and even economic shifts more accurately?
Well, this is one that's near and dear to my heart, and a model of scenario development is absolutely critical to all of our client base and critical to BMO. So if I just back up and we start with the premise, Warren, that AI is redefining how we sense, how we interpret, and how we anticipate market movement. So if we start there, the traditional econometric models are rules-based and reactive. So fundamentally, just by definition, Warren, we have to change, right? So these AI systems that we can do now can detect nonlinear patterns and leading signals buried in noise. And that is what gets me as a nerd every day out of bed, excited for this modeling approach. So to make this come alive for you, Warren, these AI systems that can blend diverse inputs from shipping volumes and satellite imagery to mobile payments to now GDP and inflation can be predicted far more accurately than the legacy tools. So it's not that AI is replacing human judgment. It's just augmenting it with the ability to look at all of these variables at once that will really help unfold a probabilistic view of what's happening across geographies and sectors, enabling these leaders to shift from lagging indicators to this anticipatory intelligence. So it creates not just alpha in the market, but foresight in the boardrooms.
So maybe drilling down a little further, how are we planning to deploy AI to serve our investment banking clients more effectively?
So AI is poised to become the silent partner behind every high impact investment banker. So when we think about deal origination, AI can map relationships across industries and identify acquisition targets based on strategy signals and flag trigger events such as activist investor activity or capital structure shifts before competitors act. The other areas around due diligence, we know that that's a big time consumption for us in investment banking. And so large language models can extract those risk disclosures, benchmark performance, summarize thousands of pages of filings in minutes. So that is really compressing timelines and deepening insights. The third example in this space is the client advisory component, and AI tools are augmenting pitch book creation with personalized insights and peer comps and predictive modeling. So if you just imagine a banker walking into a client meeting, not just with data, but curated real-time strategic scenarios. It's a powerful new world. And I'm so excited that in capital markets at BMO, we have a lot of those tools at our disposal to serve our clients better.
Absolutely. And I've really kind of been blown away by the efficiency gains we're already making because of it. And just it's not only efficiency, but it's just the comprehensive perspective that we are getting after asking a couple simple questions of AI. It truly is helping us serve our clients better. So I'm excited about what the forward is overall.
And Warren, that's where you're on it, right? That's where the competitive edge is shifting. We're seeing it from information advantage to intelligence advantage, and it's an exciting time.
Yep, couldn't agree more. So let's talk about some big macro, maybe away from finance, just some macro questions. So the first one is, help me think about strategies for navigating the geopolitical, call it weaponization of AI. How should we be thinking about that? That's a big one, but I would love your perspective on it.
If our audience could have seen my eyes get really large with that question. Navigating this geopolitical environment, it really requires a strategy in and of itself grounded in, here's that word again, resilience, but a new word, which is sovereignty and a lot of alliances. And I think that that is going to be a market distinction for us. with sovereignty in particular, we really need leaders to be pushing for an AI supply chain independence. And includes building or partnering on sovereign models, securing that domestic compute capacity, and reducing reliance on nation-state sensitive platforms. So if we think of this is AI's version of energy to independence.
I love that analogy. I think that crystallizes it, certainly for me.
So geopolitical AI risks aren't just science fiction. And I think we've seen this playbook in the past, but it is something that we can treat as a strategic reality. So we know that amplification of misinformation and distortion of markets are things that AI can do. They can even trigger kinetic conflicts via misinterpreted data. So the best defense that we have here isn't just a technical one. It's real strategic clarity. It's an international collaboration, and it's the courage to treat AI as both an asset and a liability in this new era of power. And we need the public institutions to stand up. We need our CEOs of the Fortune 500, the Global 2000, to really stand up together and partner in this sovereign kind of ideation with government, with academia. It really needs to be something that we don't allow the public sector, all of us, to just watch happen. I'd love to see us playing an active role, and that's certainly a position that we're taking.
It's going to be fascinating to watch over the next 10 years. And maybe as a follow-on to that, over the next 10 years, or maybe even in 10 years, what are we going to regret about AI?
This question, Warren, is fascinating, and I love that you asked it because most people want to know what the crystal ball is. Where are we going to be 5, 6, 7 years from now? So what we're going to regret about AI in 10 years is maybe 3 things. Maybe we moved too slow. Maybe perhaps we thought too narrowly. And I hope this is wrong, Warren. I really, really do. But I hope we're not sitting here 10 years from now regretting that we didn't design it without humanity in mind. And so when I think about that first one, moving too slowly, the companies that hesitated, waiting for that perfect governance or clearer use cases are going to find themselves outcompeted by those who learned in motion. So I think that's something that you would have heard me say several times on stage, several times at BMO. Let's learn in motion. AI is compounding, so time lost is leverage lost. So that second one around thinking too narrowly, I think we're going to regret not rethinking entire business models, completely throwing out the playbook. And how do you really reimagine capital strategies around intelligence? AI is not just a feature, it's a foundational redesign opportunity. And that third one is a big one, that humanity component, Warren. If we design AI for efficiency without empathy, we're going to lose trust. And we need to make sure that we automate but don't dehumanize, because we're going to face societal and regulatory backlash. And I just don't want to also regret the workforce decisions by either not reskilling fast enough or just underestimating the cognitive toll of an AI augmented, workforce.
Right. And what is your perception of the risk on that last one, on bringing humanity along with AI or integrating humanity into AI? We've talked about like there's a lot of dialogue about it, right? The risks, across a number of different broad macro issues. But what do you assess as the risk of humanity being left behind?
So I don't think that it's, and there's a lot of debate around this area as well. And so just offering a perspective would be that it's not so much the risk in the machines that we build in the future, but it's the systems that we fail to reimagine. So if we don't infuse AI with ethics, with inclusion, and long-term value creation from the get-go, we're going to be building a powerful engine that's pointed in the wrong direction. So the future will not ask what AI could do, but whether we made it serve what mattered. And I think that that's really the risk that we're competing ourselves against.
That's an amazing point. Okay, last question. We've kind of begun talking about it. Can you give us a few bold macro predictions about AI? Any topic, any time frame? Would love to kind of hear, what's going on in your head as you think about the next 10, 20, 30, whatever time frame it is.
AI native firms could eclipse your traditional incumbents within a decade. So companies born with AI at their core, not just ones that digitized over time, are going to probably lead market cap ratings across all industries, displacing a lot of those legacy firms that failed to re-architect. It's a really bold statement and in and of itself. And as bold as it is, Lauren, it's something that's how serious what we're dealing with is. And so that reimagining that we've been talking about throughout this session is vital. It's vital. The other macro topic that I see coming is that AI will restructure labor economics. So this workforce is going to likely split into intelligence partners and manual custodians. So there's a lot of thinking and ethics and responsibility that needs to go into that. And it's something that we are trying to be ahead of at BMO. The third macro prediction is really data sovereignty. It's going to reshape the trade policy. Countries will treat national data models as sovereign assets. So that trade negotiations are not just hinged on the commodities as we know it today, but on algorithms, compute access, training rights to the large language models. That macro prediction is probably the biggest mind-blowing one of the three.
Right. Look, unfortunately, we need to wrap it up here. This has been great. You've given certainly me a lot to reflect on. I'll probably go back and listen to this a couple times to make sure I got it all and I digest it all. But first and foremost, Kristin, thank you for giving us your time. Couldn't be more thankful to have you at BMO on our team. So thank you. And to our listeners, thank you for tuning in to Markets Plus. Stay tuned for more episodes exploring the latest trends and innovations in the market. And until next time, take care.
Thanks for listening. You can follow this podcast on Apple Podcasts, Spotify, or your favorite podcast app. For more episodes, visit bmocm.com/marketsplus.
The views expressed here are those of the participants and may not necessarily represent those of BMO Capital Markets, its affiliates, or subsidiaries.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.